session today when it comes to Blockchain Center's live streaming channel, brought to you by the Bitcoin Center New York and Miami and Anna Ginsberg herself. So I want to, the topic of today's conversation for this panel is trading and mining. Now, this is very interesting because, as you guys know, there was a lot of hype concerning the halvening that happened, and we're going to see how difficulty has adjusted. What has that halvening actually done in the markets? How are miners compensating for this? What does it mean when Binance wants to mine themselves? And then from the trading side, just today, I think we touched 8,900, and we dropped about 1.5% today. What does that mean? How is this happening? Is this correlated to what's happening in the traditional markets? Seems like it a little bit, right? But definitely going to let our professionals ask that and not me. But to do some introductions, Harry, if you just want to say very briefly who you are and what you do in the crypto space.
Yes, Harry Sudock. I'm Director of Strategy for Grid Infrastructure. We are a North American-based industrial scale SHA-256 miner. We're focused on all things Bitcoin, vertically integrated. We don't have any hosting clients, so we just plug lots of machines in for ourselves.
I like that. Plug some machines in for yourself. Is there any green energy methods you're using right now?
Yeah, so we're north of 50% green energy and renewables at this point. We see that trend continuing. You know, the beautiful part of these economics is that the cheapest power happens to be the greenest. So we're thrilled to be pushing that forward.
Yeah, Satoshi second gift. Oh, so Arseny, you're next. I see you have an eToro shirt behind you, and you must be at the Blockchain Center NYC because that looks like the walls there. But please, who are you and what's up?
Hello, everyone. Yes, my name is Arseny. I'm right now in Blockchain Center, New York. Yes, I'm listening. Here, I'm a CEO company, Watson. We are mining management company. For today, we managed around 5% from whole hash rate in the United States. You know, we manage a couple of facilities in New York State, also a couple of facilities in Canada. Yes, we deeply work in the mining space. Yes.
Okay, very cool. Yeah,
yes.
It makes sense. Mining. How long have you been mining for, Arseny?
We started in 2016. We started in 2017. We opened the first mining farm in Miami. Where are you right now? But it was a bad decision. It's so hot. But it was 2017.
Yes. Tell me about it. It's very hot here. You're completely correct. All right. Now, two guests that I see returning many times on the Blockchain Center show. Welcome back. Morgan, tell us a little bit about who you are and what you do.
Hi, Morgan Hill. I run a hedge fund called Addis Capital. We trade all markets, including crypto. Crypto is one of our main focus and obsessions. And, you know, we don't basically invest in, you know, startup ideas, but we like to trade established coins for profit.
Okay, very cool. Trade established coins for profits. All right, Peter, and you?
Erica, thank you so much for having me again. I'm the co-founder of Ronin AI. We do AI analytics and trading for cryptocurrencies. That's
cool. So Peter, how did you do today, by the way?
I mean, to be honest, I don't know, but I'm pretty sure we avoided, our hit ratio is about 55 to 60%. So in 5 to 6 trades out of 10, you make money. In 4 trades out of 10, you lose money. So I'm pretty sure even if we didn't do well today, we're gonna get some of it back.
Very cool. Okay, so let's get into, first we're just going to talk about mining a little bit, then we're going to get into trading. So the halvening just happened. Essentially, the block reward for the amount that miners get rewarded for solving this complex math problem got cut in half. Now, how has the difficulty adjusted for that? Harry, if you want to take this question.
Yeah, so heading into the halving, and hindsight 2020, our expectation was that there was going to be, a very significant hash rate decline. Our model was somewhere between 25 and 50%. We saw the shallow end of that because of some late price action heading in. But what's been really surprising is how quickly it's recovered. So the hash rate is all the way back to where it was pre-halving, which is pretty surprising. And so think about what happens with hash rate right now. There's really 3 key drivers. The first is going to be technical innovation. So more efficient machines are hitting the market. Number 2, the price of energy. looks like on average it's falling because the rainy season in mainland China has hit. And then number three, the price of Bitcoin can appreciate, which we haven't quite seen play out, but it looks like the strength of those first two narratives have all but erased the hash rate declines immediately after the halving.
Okay, so just for people that don't understand the mining side of things, what is the hash rate? In the simplest
so
way you can describe
the
it,
way that mining works is that there are, totally, there's millions of computers all over the world that contribute computing power towards the security of the Bitcoin blockchain. So that means that you hear immutability of the ledger. So the fact that you can't erase a prior transaction, that level of security is ensured by these millions of computers that are working 24/7 all over the planet. When you hear about someone who says, quote unquote, I'm an industrial miner, what that means is they're running, somewhere north of a few hundred machines into the tens of thousands of machines that are all contributing this computing power, and they get paid in Bitcoin in exchange for doing that. So, because the way the economics work is your key driver is you're paying power in exchange for Bitcoin. And ideally that power should cost less than the Bitcoin that you extract with the power. We expect when the block reward gets cut in half, some percentage of the miners around the planet will become unprofitable because they weren't running greater than 50% gross margin. They've been running less than 50% gross margin. So the halving will push them into the unprofitable territory. It looks like that happened to somewhere between 15 and 20% of the miners around the world. And those folks have either made the decision to not turn their machines back on or replace them with higher efficiency machines. So new machines that will get you above that 50% gross margin threshold.
Definitely. So Arseny, that Harry says that it's 20 to 50% of machines we're not able to keep up. What does this mean for mining pools?
No, we expected that hash rate will drop after halving like for 30%, but it dropped for 15% and it come back, And the most interesting situation that some equipment cost less before halving than it cost right now, And it's unpredictable situation. Nobody knows what will be. Looks like people just waiting to the moon. And they don't want to sell any equipment, any miners, anything. What does it mean for mining sphere and for mining pools? Everyone today, we are earning 2 times less Bitcoins, 2 times less money. Yes, and like all mining world just waiting when Bitcoin price will go up. I'll never see this situation, never in my life, because it's really strange.
Yeah, definitely.
Weird.
I mean, price is important, but I also think too, when you see like what happened with coronavirus and you see the backlog of the new type of machine, I'm not sure what is the most recent machine that's the most efficient. What is the name of it?
Bitmain.
But it's not an S9 anymore. Those are completely obsolete.
Not S9. For today we have a lot
19.
of different units.
Is it S19?
It's most efficient. Yeah.
Okay. Yeah. No, very, very interesting. Okay. So Harry, can you walk us through the process of just winning the block from the perspective of a miner? Like how much Bitcoin of it do you keep? How much are you selling? How much are you hedging?
Yeah. So those are three key pieces. So, let's just imagine that, we win the block, or our pool wins the block is really how it works. So because the network has grown so big, we get a fraction of the blocks as a single miner. So when let's just say we receive 1 Bitcoin, the first dollars out that we'll liquidate are going to be to pay for our dollar denominated expenses. So our electricity, our insurance, and our payroll are the key ones there. So we'll sell the Bitcoin to pay for those, or we'll have a hedge in place, which is something called like a hash forward. So the folks over at Biduda have a product there where you're able to forward sell hash. We've experimented with some of that before. We really like that product. We think that it's pretty elegant, and so we've used some of these hedging tools to basically take care of those dollar denominated expenses. At which point we have the opportunity to build Bitcoin on our balance sheet, which we think is a productive use of retaining the earnings there. We don't look to do it all. We look to have a well diversified balance sheet. We know that we're going to have to build future sites. None of our contractors are looking forward to taking Bitcoin in exchange for construction.
They should.
So I know, but they're not there yet.
So definitely, go ahead.
Yeah, so we look to break it up into different slices, but we definitely do like to retain some piece of the Bitcoin on our balance sheet. We think that there's value there, but we also want to be pragmatic around how we pay for our growth.
So it seems like the biggest cost in terms of mining is always going to be energy. It's these green energy sources. And what they say is, Satoshi's second gift is green energy. Because right now, the only incentives for you to use solar panels and green energy stuff is you're going to get a tax break, right? That's literally the only incentive. But now what you have is you have everybody who's mining Bitcoin knowing that in 4 years, my profitability is going to get cut in half. How am I going to adjust for that? And so people are being innovative, and there's money involved in them figuring out green energy sources. So I think because of Bitcoin, and Arseny and Harry, correct me if I'm wrong, but I think because of Bitcoin, they have now taken the excess methane from pumping out gas and from when you're fracking for oil or whatever it is, but the excess, I think it's methane. Instead of paying millions of dollars to get that sent somewhere to be ethically disposed of, they're now turning it into mining for Bitcoin. Is it methane? Like, have you guys heard of that before? It is methane? Okay.
Yeah, it's a natural gas process. So basically, when you pump oil out of the ground, you got the oil, and then you also release this natural gas, which isn't easily usable. It's a very CapEx intensive process to put in a pipeline and send it somewhere. So instead, they're capping it at the wellhead, and they're pumping it directly into a genset to be used in a generator right away to mine Bitcoin on the well pad.
Very cool. Now, Arseny, is there any?
It's phenomenal.
Yeah, no, and the thing is if it wasn't for Bitcoin, they wouldn't even care to figure out this difference, right? But it's like, how can we use our excess energy? Proof of work is very important. Arseny, do you want to explain a little bit what proof of work is from a miner's perspective? Here, you're on mute, bud.
I'm here.
Perfect.
What is proof of work? What is the difference with proof of stake, you mean?
That's okay. You can answer in that. Proof of work versus proof of stake.
It's an easy question. Okay. What is proof of work? Just miners just verificating transactions, because what is hash rate? You had the question, what is hash rate? Hash rate is how many transactions we can verify, like not transactions, like operations, like 1 millisecond, and we have like 1,000 of terahashes hash rate today, and it means we can like verify 1,000 of transactions. Yes, and how we use this electricity, we just really Bitcoin mining, we just change electricity to the money, and for my opinion, it helps a lot for the world, because for today we have a lot of really cheap electricity, a lot of gas, and you're absolutely right. A lot of gas today just goes in the air. We are not using it because it costs really cheap, and United States is not using this gas. And for today, we can people invest millions of dollars in infrastructure to take gas and make electricity from this gas and make money.
Definitely. Yeah. There's a lot of different innovative ways. Morgan and Peter, I'm going to bring you into this now. Have you guys heard of any different innovative ways that people are using to make cheaper mining for them?
Morgan?
You could say no. It's okay. I'm just rolling it into the trading portion of this conversation.
I mean, I think there's been a few people who have tried structuring a few products like, lending or borrowing, but I mean, it's not without its risks. I think the people who are really doing it are just still miners, buying. I mean, you could ideally offset if, you could structure many things. I think there's a lot of opportunities to start doing that, but I think mainly it's just miners, just mining still. I don't think there's anything too complicated, but I think the groundwork is going up so that you'll be able to start doing that. Just like, I mean, you could do Bitcoin futures or buy or sell short if you want to try to lock in a rate. I think those are going to be options pretty soon, but not yet.
Yeah, that's actually a really good point. Definitely. It's
from my end, going around political, like through some not very clean political countries, the cheapest way to produce Bitcoin is not to pay for electricity. which is
Which
possible.
countries are those, Peter?
Lots of countries.
Yeah, definitely.
United States.
Yeah, you definitely. And the importance of proof of work too is just making sure that you do have anybody that can plug into this system, right? What proof of work does is it's just solving this complex math problem. I mean, whichever computer solves this complex math problem the fastest, they are the ones that get the rewards. So regarding now, here we are post halving. The difficulty on the side of the mining side hasn't really changed like we expected it to, but how about on the trading side? So Morgan, have you seen any changes that were predicted post halving on the cost of Bitcoin?
So I'll be honest. I know there were a lot of predictions that because of miners leaving, a lot of the costs would go up, and I mean that was kind of the whole factor of scarcity. Is it was going to, at least in the short run, it was going to make it less liquid. Therefore, everything was going to cost more because people would demand a higher premium to buy or sell Bitcoin. And I've actually seen the opposite of that. There's been a lot of interest that have been attracted to the space, and there's been a lot of liquidity added from I think even some dexes have offered it from a far away perspective. They've been because there's more dexes available, there's more liquidity from different perspectives, so you end up getting a net aggregated more amount of it, and then that translates to reduced costs, reduced fees. So we've actually gotten better deals on a lot of our buying and selling. So we use derivatives to buy and sell a lot of Bitcoin. We use CFDs. We've even used options, but mainly use contracts. We don't just buy or sell Bitcoin on the open market because if we want to sell, let's say 100 Bitcoin, that's a lot of Bitcoin to sell on the open market in any exchange. Even you go on Coinbase, you can do it and you can clear it out in a matter of minutes, even if you are willing to accept a really bad price and just drain the liquidity book and have everyone out there who wants to currently buy it from you and get it filled. Or if you're trying to hit the bids, you'll take the order book and you'll end up paying hundreds of dollars above market. But to get it kind of at market, usually you have to have derivatives, and that's what we usually use, like a CFD contract. And so the trade-off with the CFD is you end up paying a higher spread rate, and if you hold it, you'll end up paying a overnight, basically a rollover fee. So those are the costs, and those actually come down a lot since the halving. Actually,
Morgan, I think we lost you. But
oh yeah. Anyway, my point is just that it's gotten better overall.
Okay, so those costs have decreased since the halving. Did you expect that?
No, not really. I expected the opposite, or expected it to be the same, but it's actually been better.
Very interesting. I do, Peter. Actually, I'm going to get your opinion before I give mine. So, what about you? Trading post halving? Are you seeing price appreciation in the way you thought, not the way you thought? What are you thinking?
Overall, the number of retail investors went up, and I think that's not due to the halving situation. It's due to the fact that there's Corona and there are no sports available, and lots of statistics is pointing out to the fact that retail investors are investing in the US, investing the $1,200 checks to gamble, stocks, crypto, anything volatile, because there's just nothing out there. Same applies to events globally. So I think it's just a coincidence that the Corona happened right around, Corona happened 2 months prior to the halving, but without Corona, we would not have seen potentially such a huge inflow of retail investors. So those events are...
So wait, Peter, you're telling us that when people aren't stuck to watching sports and watching TV all the time, that they actually learn something? Is that what you're saying?
So our sales went up. We sell special boxes that manage your portfolio. So our sales went up. Now, did the educational level of people who bought the boxes grow? I wouldn't say so.
Yeah.
So I think it's just people, they just want to take risk for the sake of taking risk.
Yeah. So is it true that there was a bunch of $1,200 buys on Bitcoin?
Yeah, that's. I mean, from what I've seen, and we started plugging into more retail platforms such as StockTweets and TradingView and stuff like that. Mm-hmm. Yes, we've seen that those guys are just pulling all the potential savings that are not spent on clothing or whatever Jordans or iPhones into a lottery ticket called Bitcoin or Tesla.
Yeah, guys, like this video if you spent your Trump bucks on Bitcoin, okay? Like this video. So for you institutional traders, there's a lot of correlation now between stock market prices and crypto. But what's interesting is in the stock market world, you're seeing 40 million plus people on unemployment, probably more because the PPP loans are funding people who are not on unemployment, right? There's a lot of people on unemployment right now, but I think in the month of March, we had one of the best performing Marches in years. So there's lots of correlations between the stock market and crypto, though, even though you're seeing, corporate buybacks happen in the stock market, you're seeing the Federal Reserve coming out saying that they're going to buy stocks. But what type of effect and correlation do you see between stocks and crypto right now? And go ahead, Morgan.
I mean, it's still a positive correlation. It's just that it's probably weak at the moment, but so the thing is you have to realize is we're talking about magnitudes, okay? So it starts with bonds, government bonds, and even corporate bonds by extension. They're in the entire pie. They encompass pretty much, I'd say 9 out of every $10. I can't remember the exact, but it's pretty high. And then you go from there when high level institutions start abandoning bonds for equities, then you see a shift and all of a sudden the equity market starts going up because the equity market is such a small little fraction of the bond market that it just takes a little bit of shifting out of bonds into the market for equities and it goes up. And so that's what the Federal Reserve is literally doing via money printing. They're getting people to basically take their money and invest it directly in the market. And they're straight up even buying bonds themselves and, putting the money back in as well. So you have the perfect scenario for a massive pump into the market. And, there's two things going on. First of all, people are getting richer in the equity markets because of this money being pumped in. And at the same time, people are realizing, anyone who's got, 2 cents about it is realizing that this is funny money. The government's literally just printing money to infinity and beyond. And, you can't do that with Bitcoin. So if you're buying Bitcoin, you're gaining value against every further printed dollar that's going to be out there, and they're not going to stop. So those are the 2 reasons that they go together, because people are saying, oh, well, I'm doing so well in stocks, I might as well take some of this and buy Bitcoin. And at the same time, you have the same logical people saying, well, I better hedge because I don't know what's going on. And, I know Bitcoin is a good hedge against inflation, or it should be in theory. So those are the 2 kinds of trends we're seeing. And, from our perspective, we've been trying to trade all of it at the same time. So it's interesting. Like we get a lot of cross correlations between the asset classes, and, when one goes down, the other can go up or sideways.
So what type of effect do you think this is having more institutions involved because they're making money in the stock market and they're like, okay, I do need to hedge my bets. What type of effect is this having on crypto prices? Because we've been pretty stagnant these last couple months.
It stabilized it. It hasn't, without this, I think you'd see a lot of volatility and you'd see a lot more drops to the downside. I think there's just been this overall market, steady flow of, infinite dollars. And a lot of those dollars are getting diverted eventually to cryptocurrency. And again, we're talking about orders of magnitude. So all it takes is a little bit of the equity money or even a smaller amount of percentage-wise the bond to go into crypto to keep it elevated. And that could be from the retail. It could be from a single institution like, Paul Tudor Jones's fund deciding, hey, we're going to start getting into Bitcoin. Or it could be, Grayscale just buying and holding for a lot of its institutional clients, which they've seen a huge demand in the last 2 quarters, which has just exploded. And it's funny because that fund is literally doing nothing except for just sit there and buying Bitcoin and,
holding it.
Yeah. Like they're literally offering no value added other than the fact that, oh, you don't know what you're doing? We'll hold it for you for now.
Yeah, which also kind of means that you don't know what you're doing because you don't know the importance of holding your own private keys. But that's another conversation. Now, Peter, what do you think about this? Do you think that there's a correlation between the digital stock market and Bitcoin?
So short answer is yes. there's a definitely correlation on the downside because unfortunately, I'm going to repeat what most people said already. The Bitcoin currently is failing to become the safe haven. So it's just an alternative asset class, not a currency. And therefore, just like any other commodity, it will potentially any other asset it might drop along with the stock market. However, fully agree with what Morgan had to say. But in the last month and a half, I'd say I had a bunch of two conversations with Jeff Vernick. Thank you, thanks for the Blockchain Center for that conversation. I also spoke the other week with the gentleman who owns one of the largest lands rich with gold in the United States, somewhere in Alaska. And I asked him about his opinion regarding gold and safe haven and digital assets. And he's extremely bullish on gold. Currently, the market cap of gold is about $9.3 trillion. And he thinks it might grow to $30 trillion in the next couple of years. And I asked him, is that because dollar will depreciate or because gold will appreciate? And he said both. So when we're talking about the correlation, the most important part, in my opinion, and that's not a financial advice, to remember regarding this current situation is that everybody is going to be screwed. Unless you have something, some kind of trading strategy, investment strategy that is different from holding an ETF or buying into mutual funds or owning your whatever, residential or commercial real estate, you will be screwed. So therefore, you need to figure out ways to invest into gold and digital assets in a way that your maximum drawdown is somewhat protected. And whether it's correlated to the main market or not, that's, in my opinion, absolutely secondary, as long as you know how to manage that volatility of your portfolio. So I didn't really answer the question you asked, Erica, but I just wanted to make the point. Just wanted to make a point that what's happening right now is unheard of. It's probably not going to end really well unless you start innovating with your portfolio strategies.
Yeah, definitely. I think in 1 month, we went from $25 trillion to $26 trillion in debt. And if to put that into perspective, if I was to count like 1, 2, 3, 4, 5, 6, all the way to $1 trillion, I think it would take 1,000 years is what they say, right? So longer than my lifetime. So for us to go from 25 to $26 trillion in 1 month, that's pretty insane. Definitely you want to hedge your bets. But right now we're just on a trend line that's keeping us pretty flat. In a perfect world, Morgan, Peter, like what will break us out of this trend line? If you have a crystal ball.
I've been thinking about this quite a lot. We go back and forth on it, and so on the downside, I really don't think there's a lot that's gonna stop it. It could literally be any whale that just says, you know what, I've made enough money and I'm tired of waiting around. I'm out. Bye. And you could get a large institutional guy who has, a few hundred million or even 50 million in Bitcoin, and he could just sell at a random time of the day, and it would draw prices, and it could clear out the order book, and you could see a trend line break, and then you could see a follow suit. And if there was he had any PR or something. So that's just one obvious one. The black swan event that I think everyone is worried about is, at least I've been worried about, is the Bitfinex Tether fiasco.
Oh, for sure.
If that comes to light, and the thing is, it could easily come to light by mainstream media and government sources because they all hate Bitcoin because it goes against their interests, and they could just easily conspire and release the news and be like, we just arrested the CEO of, Bitfinex, and we froze every account associated with Tether because of, XYZ investigation. And they would have everything legitimate. That would basically send the Bitcoin world into a frenzy. It would basically probably crash the price. I would say up to 50%, like in a day, just because people wouldn't know what to do, and they would be kind of like, well, I have Tether in this account. Am I going to get money out of this? You'd see kind of a weird situation, and that would destroy the trend line, what we have right now.
Okay, so that would destroy it on the downside. How about the upside? Give me some positive stuff here, man.
The upside is not positive either. It's even worse. The upside is...
You're right. It is like us defaulting as a government. And everybody. Yeah, you're correct. Absolutely.
That's basically like, there's going to be literally like blood in the street, and, you're going
aliens are invading. Like Everybody get on Neuralink, plug your brain up. You're in Mars, but just kidding. You're really on Earth and you think you're in Mars. Just plug in
Yeah,
your
and then they're going to
Can I
pay
ask
you
a
in
question?
Bitcoin, and
Yeah, please, Harry, please.
What do you what's your guys' take on this, on the current Hong Kong situation? So CCP comes in, passes something called national security law that terrifies me. And then Boris Johnson says 3 million of you can emigrate here. There's a path to citizenship. Do you think there's a narrative around capital flight within that geopolitical situation that could take shape here?
Yeah, I think so. I'm not sure how it's going to play out. I think it's going to be fairly unpredictable. It seems like, we're talking about literally billionaires in Hong Kong who would have refugee status in the U.S. or UK. Like that's unheard of, really. And are they going to just pack up all their
Exactly.
Bitcoin miners in a suitcase and come over here? I don't know. I don't know about how that's going to affect the Bitcoin market, but I mean, I could see
Well,
Tether being away.
I was thinking more from traditional markets.
Oh yeah.
I was thinking more, what are their liquid portfolios like? Why isn't their liquid portfolio not going to move into something borderless, put it on a USB stick and get out of there?
Yeah, that's very true. I mean, I don't think there's a lot of, that would be one of the most logical transferable, I'd say, asset classes. You can't just go ahead and switch it over to an equity market with ease. So yeah, it's very possible. Exactly. I'm just, there's a other side of it, which is the CCP just locking everything down as well and confiscating assets or taking control. And I mean, there's still such a huge, Bitcoin presence with Bitmain and everything in, regular China. So I don't know if it's going to really be that impactful on the crypto markets. I haven't really thought about that.
Yeah. Definitely. That's a really good question, Harry. You guys, if you have questions for each other, please feel free to ask. I am not the arbiter of truth, just like Google is not the arbiter of truth. Now I do. Sorry, my little
nice.
Joke.
There we go.
But I do have a question that someone asked about Binance and exchanges. So this is a question that all of you four can answer because Binance is an exchange. But Binance is the first that is entering the mining business. How do we think that this is going to impact miners? They've suggested they're going to offer derivative options to help miners deal with a high volatility of crypto pricing and difficulty. And thank you, Greg, for asking this question.
I can answer this question.
Thanks for sharing.
Yes. Okay. Yes. Everyone saw, everyone from mining space, so Binance opened a mining pool. For today, if I'm right, it's top 5 mining pool in the world, just after a couple of months. What Binance really do, these guys just find some new customers for their exchange, and what they do, they just they do a lot of dumping on the market because they offer it for the miners today. They are offering 0 fee percentage on the pool. Usually some other pools have a 2% fee, 3% fee, 1.5, whatever, yes. But Binance offering 0% fee because they really don't need to be in the mining business. They just want to have more clients of their exchange.
Mm-hmm.
And what we see right now, this is monopoly. Binance can control whole the markets. If Binance really will want, tomorrow Bitcoin price can be 6,000. I'm sure they can do this in one day, really. Just Binance can do this, and CZ and friends.
CZ and friends, that should be a show.
Yes.
Harry, what do you think about Binance joining the mining scene?
I think, listen, I think that it's good to have additional competition. I think that having access to market tools is something that a lot of miners, either don't have or don't know how to use. It's pretty hard for a bunch of them folks who are currently mining at size to get access to, a CME account. So I think that this is good from the options market perspective. It's something that we do. We actively hedge our position. We actively hedge, different aspects of the business. So, selfishly, I think that it was a moat for us to be able to have other people not be able to do that. But I think that the democratization of financial products is a good tailwind. Maybe it'll save some of these folks from blowing out next time.
Yeah, definitely rightfully so. I mean, if game theory is the reason that keeps Bitcoin honest, when you have somebody that's built their entire exchange and their entire business off of trading these assets, they are incentivized to keep Bitcoin honest. So having them playing the mining game is not exactly like a bad thing. But how about you, Peter and Morgan? Any insights on having exchanges where people trade crypto now mining crypto? Do you think that's going to change anything?
I mean, it's like vertical integration is what they're doing. They're trying to get more of the whole supply chain of Bitcoin. So, and it's not just Bitcoin. I think they're going to be mining everything, right? Like it's not just it's not just Bitcoin, but I think they're going to be able to mine many different coins and basically supplement supplies. So it's really going to give them a lot of leverage to dictate the market, I think. And I mean, from that perspective, they could start, taking over kind of a monopolization of it because, I don't think Gemini or Coinbase are on that path yet. So it could be really interesting depending on when we say mining, how much they're going to take on.
Yeah.
Like I don't know the levels they're going to supplement, but that's really going to be impactful if it's significant.
I wonder if how much of a premium they're going to charge on their coins, their clean coins. Sorry, go ahead, Peter.
The other thing that I'd say, and you made a great...
Harry. Sorry, Harry.
Oh, it's okay. I was just going to say it's a liquidity play. Like for Bitcoin, it's net new customers, but for everything else, it's just a straight liquidity play.
Mm-hmm. Exactly. Why buy it from someone else's?
Like the slippage. Exactly. Like the slippage on all their order books down market are so brutal that this is a way to avoid some of that pitfall, and they'll be able to drive actual volume size like down the market cap list.
Yeah, definitely excited for this. I think vertical integration, you put in a really great way, Morgan. So now you said something about...
Can I disagree with this?
Yeah, please, Peter. I love it.
I think huge negative. So guys, do you know how exchanges work right now? I mean, you can say there are a bunch of institutional players in the crypto. That's bullshit. There are very few and they suck. How do I know? Because I talk to them. They don't know shit. Like, it's that bad. Exchanges don't know shit to the point where our project of little size can still negotiate with them. That's just unheard of. Right? If I raise whatever X amount of dollars right now and go to any of the existing brokers or broker dealers in the traditional markets, they'll tell me not to talk to me, right, at this point of time. So how do these exchanges actually make money right now? Do you guys know? Exchanges and brokers
listing fees.
Yeah, exactly. Fees on trading.
Well, there are implicit fees, right, and explicit fees. So the explicit fees is just the trading fees. The implicit fees is the bid-ask spread plus slippage plus every single time Bitcoin drops 2%, Coinbase Pro is out, right? It just doesn't work anymore. Mm-hmm. So those are called implicit fees. Now, how else do they make money? Have you guys heard of this? Like when you are as a retail investor, when you guys as a retail investors are buying stuff on Coinbase Pro, you're not like say you bought one Bitcoin on Coinbase Pro, you're not buying Bitcoin on Coinbase Pro because they know the statistics. 98% of day traders lose money. 98%. That's statistically, academically proven. And when Coinbase Pro came out with a stupid freaking article, like I'm not sure how much arrogance they have to even post this and announce this, that they are one of the top holders of Bitcoin. It happened about 6 to 9 months ago. Mm-hmm. That just shows that they are playing against their users. They can manipulate all kinds of statistics. I'm not trying to be a conspiracy guy. Like I just see it all the time. Like the simplest example on Coinbase Pro, you see that stupid order book thing. It never works. It's always wrong. They use spoofing, which is illegal in every single asset class. Spoofing is when you advertise volume, which is not real. Now, because they're the exchange and the broker at the same time, they are playing against the customer. Why? Because the customer would deposit real Bitcoins. 3 months from now, 90 days from now, the rule 90-90-90 applies. 90% of traders lose 90% of their capital within 90 days. They do have to keep the Bitcoin and thus become a huge holder of Bitcoin. Now, will additional mining help liquidity? No, because there's no liquidity. All this liquidity is fake. It's not the actual Bitcoins changing hands on the blockchain, right? So it's not the transactions that we care about. It's just the liquidity on a monitor. But then at the back end, it only gets matched once the retail investor loses everything. So is that a good thing that these guys right now are also adding the mining aspect to this? Well, that's just capitalism. That just like probably had, we had to expect that because the business models are so fat. The fees are about 25 to 50%, 50 times higher trading fees on stock market, on crypto markets relative to stock markets, right? So we just by trading through them, we're just incentivizing higher level of monopolization across holding Bitcoins by the exchanges. Is that a good thing? No.
So yeah, Peter, I think everybody in this panel is on the same page where we do not want the centralization of just really anything, but specifically when it comes to our money. So what do you suggest we do?
What you guys are doing right now is great. And I mean, you just need to educate. I mean, you really need to educate.
But does Ronin AI provide any options for people to be able to not have to, because like, I mean, I agree with you. It's like Coinbase's order book is fake. It just is, right? And what's interesting is, and many people understand, is that when you are moving assets on a blockchain like Bitcoin, all of those transactions are recorded. But when your money is in an exchange, they can do whatever they want with it when it's at that address. So, I mean, is there anything else that we can do other than like teach people? Are there any technologies and any ways that we can call people out? Even though I don't like resorting to like, hey, let's snitch Coinbase out to the government. That's really not my style. But, I also don't like them doing fractional reserve stuff on crypto.
How criminals work in Russian prisons?
Okay, tell us, please.
Right, Arseniy, you probably know, right? So there are 3 guys in a camera, and there are other 40 guys. The 3 guys are organized together, and the other 40 guys are not organized. So those 3 guys terrorize the rest. That's really how it's happened. So 5 to 10% of Russian prisons are being terrorized are terrorizing the rest. The remaining, 90 plus percent. So same thing applies. Money always wins. So you have a highly organized group, potential cartels of centralized exchanges. You have similar situation with mining pools. No offense, guys, right? But it's pretty much similar. So you guys can be organized together as OPEC, or you can get organized together as military, right? As say United States and the NATO in Europe. So the only way for the general common person to fight is to also group up with other people. That's the only way. At the end of the day, money will win. So the money flow has to be higher. So it goes like this. If you have 1 million people with $1, that's $1 million. If you have one whale with $1 million, that's $1 million. So since the common man does not have that much money, high level of education has to take place because we need to encourage and incentivize those people to invest money and invest resources into digital assets. There's no other way around this. And then we also need to educate them regarding how they should be acting in their best interest. So decentralized exchanges is the way to go. Education is the way to go. Sophisticated tools is the way to go. Even buying and holding is way better than just day trading, unless you have a better, more sophisticated strategy that minimizes your downside. So
like Ronin AI.
That's what we're trying to do. Yes, that's what we're trying to do. Yeah.
No, very, very great. Cool. I'm going to ask one more question. Then I know there's a lot of questions from the audience, so I'm going to start asking those. But around the circle, why do you think we, in very short answer, but why do you think we are remaining stable post-halving? Harry, you can go first.
Same buyers as sellers.
Got it. No, not many new entries to the market. Arseniy?
It's a summertime. We will see a lot of surprises in autumn in a couple of months, 2-3 months.
Okay, so you're saying this is happening right now, but don't expect it for much longer. Got it. And Morgan?
I'm really trying to figure it out myself. I'm not even sure yet. I think there's a lot of different players.
And Peter, why are we stable right now?
My take on this is that price, when we were trading at up to 13 grand last summer and then 10 and 8, I think we were overpriced. And I think now potentially is a much more accurate price based on value than it used to be a year ago.
Yeah, I kind of like when Bitcoin's around $10,000 because then, you can calculate it easier. But I also like if it was $100,000 because then you could really calculate it easier. But anyways, all right. So here I have a question from Jose Manuel. This seems like it's targeted towards Harry and Arseniy. What do you think of a possible hash war between the West, especially the States, and Asia and some regimes like Iran or Venezuela? Terry, you can shoot at it first.
It's unrealistic at this point. The ASIC market just isn't big enough to be able to enable enough global hash to engage in that type of war. We're just not there. Bitcoin, the asset isn't big enough, and the means of production aren't optimized around ASIC production to a degree where a hash war is realistic.
Very interesting. And Arseny?
Hash wars. I guess everyone knows like around 70% of worldwide hash rate are held in China right now. The second place in the world, this is United States. It's around like 15-20% from the whole hash rate in the world. And I guess we will see this situation next like 5-10 years. And the main player here is China, and United States also have a chance to be like one of the main players in this market. It is. We're one of the main players in this market because it's a lot of money here and a lot of cheap electricity and a lot of old infrastructure, what we can use for the mining.
Do you see any other countries going to start manufacturing, mining equipment, manufacturing these cards?
Russia and Kazakhstan. It's really popular country for the mining because a lot of cheap electricity and cheap labor. The problem in the United States is expensive labor cost.
So
no,
do we?
Russia and Kazakhstan, yes. What about Iran or some other country like Venezuela and something else? I don't think so. It will be still just small mining manufacturers. Maybe they will take the couple percentage of the market. And that's it.
Yeah, definitely. I mean, that's an important note to make, is that I think that you're seeing in Kazakhstan, they have a lot of natural resources to create these chips and to create like computer wires and stuff like that. But you're not really seeing that in Venezuela, even though Venezuela probably is one of the biggest mining countries, just because, they need it. So here's another question for the miners is from Julian. Can China nationalize crypto miner farms? I mean, they can do whatever they want, right? They can take over Hong Kong.
It's a good question.
Yeah.
Yes,
They
can. In my opinion, like in the future, mining business will be like a gold business. You will need to have a lot of license, a lot of permission to make this business. It should be like this, like a gold business.
Should be nationalized. What do you think? Okay, so here's some dystopian stuff. Let's say that China does nationalize their crypto miner farms. Peter and Morgan, what do you think would happen to the price at that point?
Probably drop a lot.
A lot. That's what I think, but you never know. I mean, here's.
I think all the countries will eventually try to nationalize Bitcoin if it keeps going in this direction, because it's just going to be too much of a threat to their existing currency, and they'll try to at least kind of accommodate it into their national currency policy. They'll have to. They'll have no other choice, because if people start using Bitcoin exclusively and bypassing the existing monetary system, then they'll lose that as a control and a tool. The Fed will be irrelevant. So they're going to, I think I read somewhere the other day that the US actually purchased like Bitcoin miners. So, I think all the countries are going to get into it eventually if it keeps going in this direction.
Yeah, no, for sure.
Yeah.
And they're going to have to. It's like right now what's happening with PayPal. The reason why they're accepting Bitcoin is because they saw Cash App make, I don't know, what is it, $300 billion just because they're doing Bitcoin stuff. So it's like, you're gonna be forced to innovate, otherwise get left behind. And I think we're okay if you get left behind too. So don't worry about it. All right. Any thoughts on that, Peter?
There's a thing called fork.
Mm-hmm.
So
Very
if
true.
something happens, we're forgetting about the Bitcoin developers who will figure this out. That's, I think, the great part. It's not just the great thing about this panel, it's talking about mostly socioeconomic factors, which is, mining, making money, incentives, trading, just adding liquidity and therefore adding marketing to it, right? Aspects. So it's like more socioeconomics business. But then the core is still blockchain. The core is still having a trustworthy ledger. And I think developers will just work the thing out of it. If miners are being, think about this, in China, the nationalization will happen like this. Here's $1 million, whatever. Here's X dollars. Get the hell out of here. Right? I want to see you again, blah, blah, blah. These guys, the miners will do something. Before They will definitely do some kind of trick to help fork the entire system to make sure they can still mine.
Now there's this whole ethos in the crypto space, which is run your own node, right? Which a node is essentially a copy of the blockchain, and you can route payments through your own node to verify your own transactions if you're not depending on anybody else. What does, and I never understood this really, but what is the relationship between nodes and miner dominance? Harry, maybe? Yeah.
Yeah. So basically, at the heart of it, the users dictate the software that runs. So Bitcoin has this beautiful component to it, which is that every version is backwards compatible. So if I'm running version 10 and you're running version 20, we can still send transactions to each other.
Okay.
If you go and start running version 21 and version 21 isn't compatible with version 20 or any of the priors, you will be what is called out of consensus. So if me, the miner, starts running out of consensus version 21 and everybody else says, shove off, we're all going to run 20. I can't transact with any of them. And that's how you end up with a forked chain where I may be mining to a new chain, but all of the consensus transactions and all of therefore the value is happening within the consensus set. So you've got this in consensus UTXO set, which the most recent blocks support. So UTXO set is just where are all of the Bitcoin balances at all the different wallets. So when you think about the value that sits within the Bitcoin blockchain, it really comes down to the fidelity of the current UTXO set, because we can all agree that we are in consensus and we know that the Bitcoins that sit at each of the wallets within consensus are valid and are there for the right reasons. And so at any point that a fork happens, you just need to port the UTXO set to the persistent fork. And the value that the blockchain represents and the balances that it represents will be able to be passed forward. So there's this beautiful interplay that miners don't get to dominate the network because they provide the compute. Because if everybody else decides that the mining hash rate is out of consensus, get out of here. You're not going to work with us. So there needs to be this relationship of compatibility within the folks who are contributing the hash rate to the network and the folks who are running the code that validate the transaction. Yeah,
very, very good answer. Very good answer. I have nothing to say about that except for run your own node, you guys, because run your own node.
Run them.
Very cool.
Learn YouTube. You don't have to be technical. Go on YouTube. It costs a couple $100. You are taking the sovereignty over your entire life.
Yeah, or you get a Casa HODL, plug that bad boy in. I think it's $50 and you have your own node. I think the cheapest way you can get your own node right now, we have a Casa HODL here at the Bitcoin Center. But the cheapest way is I think you get a Raspberry Pi, which are like $20. And if you're technical, you can figure it out and run your own node. And that really is self-sovereignty. So beautiful, beautiful statements, you guys. Really great conversation. And I am going to allow each one of you to say a closing message for our crowd. And hopefully we will see you again soon. Peter, we will start with you, sir. Anything you want to say in your goodbyes?
Not a financial advice. Definitely try to educate yourself about digital assets, specifically the top 10, the most liquid ones. Protect your volatility on the downside somehow, because it seems like that's your only way out of this madness. Thank you.
Thank you. Morgan?
I would just say watch the prices. I think there's going to be some crazy volatility coming and probably to the downside. So, just be prepared for things like that. I'm not a financial advisor, so I'm not giving you legal advice or financial advice for this, but that's my opinion, is just be prepared for some volatility. And, if you have some extra cash, personally, I'll probably load up.
Ooh, that's a good question. I'm going to have to have the both of you on our Trading Tuesdays show to spice it up a little bit. All right, Arseny, anything from you, sir? Any closing thoughts from the Blockchain Center New York?
Blockchain Center New York.
Other than all the people walking behind you.
Yeah. Right now we have a global crisis, and a lot of experts and governments are telling us it's the biggest crisis than you ever had in your life. Yes, and earlier we didn't know what did with all our money, with real estate, with everything. But today we have a Bitcoin and we know where we can save our money.
Very true. Very, very true, sir. And Harry, anything from you?
Yeah, the world is a lot scarier today than it was a year ago or 10 years ago. And what it comes down to is that it may not be the five of us on this panel today, but there are going to be hundreds of millions of people all over the world who would give anything to be able to flee their country with their wealth. Mm-hmm. And for the first time in history, they don't have to sew diamonds into their shirts. They're able to put a USB stick in their pocket, or they're able to put 24 words in their mind, and they're able to travel anywhere else with all of the work that they've put in for their entire lives. So the fact that they have this tool, we need to put this into people's hands. We need to teach them how to use it safely and responsibly, and they need to size their position properly. But this is a tool that has never existed before, and if people don't know how to use it, they won't be able to change their futures.
Very true. You know, a lot of times before, when there were tumultuous times in a nation, a lot of people had no options. We are very, very lucky that we all have access to the internet, and Bitcoin is a form of money that is outside of the control of governments. I think maybe we should do something one time where it's like, let's teach everybody what a brain wallet is. You know, how you can just remember your seed phrase and then beam it up to the node that's a Blockstream sent into space, and you know, your money's intact. It's on the blockchain. So definitely a lot of value you guys added. Thank you so much for, you know, just being here, providing your insights. And we're definitely going to have to do some just like only miners, only traders, and get into the weeds of things. So watch out for that price action, guys. If you have not already followed our lovely panelists today, please find them on social media or on LinkedIn. I'm sure you guys are probably all on LinkedIn. And if you are interested in learning more about blockchaincenter.com and what we provide, we do a lot of free educational material, one really almost every single night of the week. You can go to blockchaincenter.com and enter your email and subscribe for updates. So thank you very much, everybody. And
thanks, Erica.
I will see you again.
Thank you, Erica.
Thank you guys.
Thanks, Erica.
Thank you guys. Appreciate it. Bye.
Sorry?
Don't leave without taking the laptop over there.
Oh.
You're